Hey, my name's Chase Nicholson and welcome to my YouTube channel. In this video, I want to talk about an interview that the Times did with the Governor of the Bank of England, Andrew Bailey. These interviews are very, very important because in between the Bank of England meetings, they give us the clearest indication on what the bank's thinking and where they're expecting interest rates to go. Now, while they won't come out and say directly, we're going to cut or we're not going to cut in the next meeting, they will give hints that the markets really pick up on, and often we can decide and determine where rates are going to end up at the next meeting. So in this video, we're going to talk about what's the expectations. Are we going to get an interest rate cut in August, on August the 7th? I'm going to give you the latest update and the data on that, plus much, much more. Now, if you're new around here and you haven't done already, do make sure you subscribe to the channel over there and hit that bell notification. We're on the way to 45,000 subscribers. And by subscribing, you'll get all the latest house price news, interest rate news, property news, investor news, and much, much more. And let's get some views on this video. You can help me with that quite easily by smashing like, tickling like, doing something to that like button. That really helps with the YouTube algorithm, and that really has helped the channel grow to where it is. So thanks to everyone that does that. So this interview is with The Times, and Andrew Bailey will probably do about 5 or 6 interviews each and every month. And they're really important because in those interviews, they give us subtle hints and guidance on what they're thinking. Like, as I said in the intro, the Bank of England's goal is to get inflation around the 2% target. They don't want it too low. Deflation might sound great, but it's actually very bad for the jobs market. And obviously we don't want it too high like it's been for the last few years. But there comes a point where they will look at other data as well. And specifically right now, they're looking at the jobs market. That's where they're worried, because the inflation that we've got at the moment, which currently sits at 3.4%, that is mostly what we call supply side inflation. So a lot of it is in energy costs, and having higher interest rates doesn't really bring that inflation down because it doesn't bring the cost of energy down. The inflation we have at the moment, as I said, it's supply side, and that isn't caused by you or I going crazy and spending lots of money, getting lots of credit cards and going wild. It's due to the fact that energy is very volatile and unstable at the moment. And so then they have to look at other things, and the jobs data is worrying at the moment. There's only 700,000 vacancies at the moment in the UK, which is around about the same amount that we had in the pandemic, just to give you a guide on how low that is. And so that does worry the Bank of England, and it indicates that the jobs market is cooling somewhat. So they're gonna keep an eye on that. Plus, we had some bad GDP data. The economy's shrinking, and it isn't great. If that continues, we'll ultimately officially be in a recession. And then the Bank of England could cut rates quite quickly and quite substantially. And that will be done in order to get the market going. But as we saw in 2008, when the house prices started going, we had the global recession. Cutting rates didn't really move the market very quickly. People just sat on these low rates and it didn't stimulate too quickly. And so what they're trying to do is make sure that right now they cut in a downwards trend in order to try and make us not go into a very, very deep recession. So what do the markets think about these types of interviews? Well, if you looked 2 weeks ago, the chance of an August cut was 76%. And that's what we're talking about. The market's betting 76% chance of a cut. Now, because of interviews like this, more specifically because the GDP figures are down, the economy's shrinking, now the markets are saying that there's an 85% chance of a cut in August, which is really what we want to see. If you have property, you want to see the interest rates come down. If you want to see the economy not go too bad and not people get hit really hard with job cuts and stuff like that. We want to see these rates come down to get the market moving again. Now, the inflation data is 3.4%. This Wednesday, we've got the next inflation data, and it's not expected to be much better. It's expected to be pretty much somewhat the same as what we've got at the moment. So that will stick around the 3.4%, which is not great. Now, how much of a rate cut could we expect? And when is the next meeting? So the next meeting is on the 7th of August. I can't remember when the Federal Reserve one is, but it's in July. Let me know in the comments if you know that. You can quickly do a Google search for me. That's ahead of time. The Federal Reserve are expected to hold. So that's not great. But if they did cut, that means we could get a little bit of a bigger cut to our rates. Our rates are expected to go down 0.25%. Down on the 7th of August, which would take us from current rates of 4.25 down to 4%. So that's moving in the right direction, and that means that tracker mortgages would instantly become cheaper. It would also mean that if you've got savings, unfortunately, the return on the savings would likely drop. The banks would cut that rate to you guys quite quickly as well. So you probably would lose out if you're a saver. What else is there to cover on here? I think that's pretty much it. So look, all in all, it is positive what the Bank of England are saying if you want rate cuts. Like I said, they're not like the Americans. So the Federal Reserve, when they have interviews, they will get asked very direct questions like, how many interest rate cuts do you see in 2025? And Jerome Powell would answer with something like 2 or 3. They would give you a specific number. The Bank of England don't like to do that because things can change. As we saw, inflation has come back. Job numbers might not be as bad, so they don't like to let the cat out the bag as much, but they will hint and imply, and that's all we can go from. But I think there's a very high chance, I believe personally, that we will cut rates on the 7th of August. I think that is very, very likely. And I think as we get closer to that date, you're going to see the market expectations change. And I think you'll get to high 90% that we're going to see. Other interviews will be done with other members of the monetary policy on the Bank of England. Remember, there's other members in there. They will be going out to the markets, and they're doing this to get the markets ready and get expectations built into where we're going to end up with rates. Anyway, let me know, what do you think? Do you think they're going to cut rates in August, or do you think they're going to hold until a later date? Do comment below, do smash like and subscribe while you're here. And also check out all the other content as well on the channel, including this video right here.